Hello, traders. Bonjour, guten tag, and all that. It is. Excuse me. Ooh, it's the season of hay fever. Um, Thanks for joining me today. It's 8:01 Chicago time. Beautiful day, beautiful weekend coming up. Um, it is Thursday, the 14th of June, 2018. We just had the ECB announcement about an hour and 15 minutes ago, and Draghi speaking. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, things looking strong. I've got a completely, almost all products that I monitor are up from settlement, except for the euro, which of course got hit by the ECB announcement. There's an adjustment that they're making. And the British pound, everything else is up. The leader today is the DAX, up 95 points, 96 points, or 0.75%. Crude oil is back at trending up again, pushing higher. Inventories report was very supportive of a push higher. And overall, the S&P closed on lows on a neutral extreme day, and now trading in the middle of yesterday's range, in the middle of the balance over the last few days, squeezing its overnight highs. So looks like we're in for a little bit of action on the open. Don't forget, a couple things not to forget is tomorrow is Quad Witching Friday. Quad Witching, the options on the indices are expire at 8:30 a.m. right on the open. Until then, and potentially a little bit after, we would have a lot of action involving the final roll, which is almost done, according to the CME's website, the rate of the roll. But also, as I was discussing just now in the Convergent chat room, that we would have a pretty good amount of delta hedging using futures. So we may see size coming in. We may see odd activities, what I should say. And so that's where we are. As far as what could interrupt our auction today, we had a lot of numbers come out: import prices, retail sales, initial jobs. Look those up. However, at 10 a.m. Eastern, 9 Central, business inventories for April expecting 0.3%. Nat gas, which has no effect. And currently ECB president speaking. But other than business inventories, we don't have much interruption. The last thing I want to say is I will not be in tomorrow. I'm traveling after work today. In fact, I'm leaving early. I'm not going to be here for the close. And I will not be around tomorrow. We'll be back as per usual Monday morning. Let's take a look at what we expected yesterday versus what we got. Here's the expectation on one chart, thanks to the person who pointed that out, the Smog. The primary expectation is just a chop fast crap trade all the way up to the green dashed line, vertical green dashed line, where the FOMC gets released, and we either get wider swings consolidating and then finally letting go. I was expecting 27.74.25 as the extended target. Key target's 77.50. That's the secondary scenario, the blue scenario. The green scenario is the primary, where we push up and we consolidate and chop around 2800, pushing to 2802 and settling at 2800. Scenario 2 was in charge. Here's what actually happened. FOMC SOC at 2791.50. We tested above the prior day's range. We had an extension, a range extension higher and then we fell back into the range, went through to the VPOC, pulled back almost to the high of the range, and then fell to value low, went sideways until we got the FOMC announcement, which was right in here. The FOMC tested the open on a pop-up, couldn't hold it, pulled back, tested the mid of the session on a pop-up, and then from there extended the range down, pull back just 2 ticks short of the mid again, continuation, takes out the prior day's low by a couple points, comes back, tests a mid again for another attempt at the low, holds at the stock zone, and rotates all the way back to the open again, and then starts to move back lower. So to me, this looked like just intermediate to short time frame, intermediate to time frame, okay? Intermediate time frame, short time frame, short time frame, and then back to short time frame, and then intermediate time frame traders in control to finish the day. So it's, it's respecting even the pullback here. See, the pullback is to a day time frame level. The prior day is low. So this auction is really not getting much participation by, it's getting some, but not getting a lot of participation by the highest time frame. Yesterday looked like a trend down, but it really wasn't. We didn't migrate the VPOC at all. We didn't form many areas of consolidation. We did finish on a neutral extreme, and a neutral extreme says that we are likely to continue in that direction in the Globex session, and we did. We put the overnight low at 27.7225. Now, remember, I was looking for 77.50 yesterday. It got to 78.75. Missed that by 5 ticks. And then I was looking for the extended target of 74.75, and it got to it got it on the overnight. But now we are trading up here. Whoa, I'm scribbling a lot today, huh? It's a scribbling day. We're trading up here against the overnight high. Okay? And so that's how we ended up. Yesterday was an engulfing day. Okay, it tested above and it tested below all in one day. We have several days of range here. Again, let's put on this micro composite. So the micro composite was very stocky, as you can see. Follow the shape and how it's changing as I transfer the profile forward. And see how it fills in. See how it fills in higher right there? Very weak, sluggish high, terrible high. As we move forward, and then the point of control is remaining right at 27.9250, which is yesterday's open and yesterday's point of control, and we are beneath it. It's likely to be a magnet. This 27.9250 is likely to be a magnet this morning. I don't believe that we are done to the upside until we get there, until we test that. And then from there, the profile from the point of control up versus the point of control down, the profile is very weak on the high side. See that? The point of control, we have this very steep slope down. We don't have clear, clean rejection of those highs. We trade them pretty well, right? We trade the highs pretty well. And so I'm still under the impression that it's likely to continue to 2,800 at some point by tomorrow. So we'll see how that plays out today, but that's the recap of what went on yesterday versus our plan. Here's the overnight session. We reopen and we trade basically above and below the close. Inventory is about even. The overnight profile shows price discovery. The volume is relatively high, again influenced probably by roll and expiration, and we are pushing against the key low volume node from yesterday, right in this 27.8975 area or so, 88.75 area or so. We're in that area. Looks very bullish coming into today's session, and it looks like we are recovering the value that we've put in over the last few days. Okay, so that's where things stand. Where do I stand on today's action? Well, before we do that, let me get you to have a quick glimpse at the profile. Where are you, profile? RTH, center, there we go. So this has been the profile for the week. So we have a double distribution day. We fill the double distribution. We trade above that area. We build pretty good volume above that area. We extend down. We close at the low. Okay, with a relatively weak close. We close at the low. The low happens to be the point of control from Friday. And if I merge these right, merge right. So when I merge these profiles to build me a weekly profile, this is the same as a micro composite. You could see the bulk of it's in this 91, 92 area, even in market profile. And there's no taper it's a smooth taper at the top. You could see it much more obviously in the volume profile versus the market profile. But this week is trading pretty thoroughly this area with this 91, 92 being in control. So again, I believe that to be a magnet this morning, and that's what's driving my main ideas. So let's look at where we're headed. Let's change our colors. We'll use a nice bright green for the primary. Expecting open auction in range. Why open auction again? Always open auction. Well, we're in that. There's no real value here. We are in range, so expecting it to be a two-sided auction. I'm expecting a test down. I'm expecting an impulse up through the overnight high. I'm expecting a push into 27.9250. Consolidation there for most of the afternoon, and then eventually a take of 96 to find sellers again on the new high. That's what I'm looking for on scenario one. Have you noticed that scenario one all week has been bullish? Because the trend says so. Let's do scenario two. Scenario two, let's go with someone's suggestion yesterday and go with like a magenta. I don't know what magenta looks like, but maybe something like this. Again, open auction. Open auction to test higher. Push into the VPOC. Consolidate. And then impulse down and start to rotate towards lower areas. 83.50 expected to tangle, and then expecting it to be an inside day if it does so. Expecting this to be supported, expecting buyers to step right back in. There's nothing here that threatens the uptrend yet. Yesterday's move was not an impulse on the larger time frame. It was a fairly muted move down after the FOMC. The third scenario, which I'll color maybe gray since we're doing this together. The third scenario is an open test. Oh, that looks awful. Let's not do gray. All right, that was a bad choice. Cyan. Is a test higher, an impulsive test higher, open test drive, impulse down, consolidate at 83.5. Go for the low and continue to get this key area down that we haven't tested in the day session, and then a push lower into 27.96, 69.75 for the range. That's scenario 3. I think those colors are good for now. So those are the three main ideas. One is a test down or consolidate in an open auction and then drift up into the 9250, get tangled there. There's a heavy point of control there, and MC point of control. Push the high, and as always, I expect the high to be taken and then for it to fall back in, and then it's anyone's guess from there. The secondary is it consolidates, pushes to the point of control, fails to continue, and then starts rotating down with an impulse down to consolidate and remain in range. The third scenario is a push-up. Now, this depends on what the treasuries do. Is a push-up, open test, drive down. So we look for an impulse down, impulse right here with a continuation, and then we're looking for yesterday's low to be tested and a consolidation. This would be the selling scenario, which is not likely. Okay, so again, I remind you, we'll keep this, I don't have much more to say. I want to remind you, tomorrow I'm not around. Next week, by the way, on Tuesday, I'm doing a product spotlight, convergent product spotlight on news services. We'll have someone on going through what their platform shows, and also how traders are using news services. For those who are interested, you'll get a link for that on Twitter, and if you're on the list, you will get an invitation for that. Good luck today, and I'll catch you soon. Take care.